What is going on, everybody? Wanted to do a quick trade recap on pound Japanese yen, trade taken last week. Let's break it down on the daily chart first. So what we can see on the daily chart is prices making a series of higher highs and higher lows. We can see that we are in a very clear uptrend. And essentially what was happening here is once price broke these highs right here, what I was looking for was a potential pullback play. If I jump to the 4-hour chart, what we can see is we have our daily structure high here, daily structure low here, and we can see that on the 4-hour we started to turn bearish, breaking this low, printing a lower low, retracing back up, creating a lower high, and then moving back to the downside, creating equal lows, and then moving to the upside. Now, the one thing to really stress here is these equal lows, which was ultimately the target of this trade. When we see equal lows like that, what usually ends up happening is there's a ton of liquidity sitting underneath, basically in the form of sell stops. So anyone who would have bought in these regions would likely have their stop losses in and around here, and anyone looking to basically sell on the break of that resistance would then have orders or potential orders sitting in here. So basically, at the end of the day, there is a ton of liquidity resting under these equal lows. If I drop down to the hourly chart, what I can see right off the bat is we started to create lower lows and lower highs. We broke structure here, and this is what ultimately shifted to the bear trend that goes in line with the 4-hour structure. And what I can see is the move that broke structure, this momentous move here, we have an order block. But again, if we look to the next candle, it doesn't engulf, it just spikes the high. So what we can actually do is we can refine our order block to this candle here. And basically this would be our 1-hour point of interest to look for price to come back into and then look for a case for entry. When it comes to being a trader, we want to stack as many confluence as possible and not just put orders for the sake of putting orders and hope that the trade plays out. Now if I drop down to the 15-minute chart, what I can see very clearly that works in favor of the 1-hour, we can see these lines being the 1-hour points of structure, broke structure here, but what we can see on the 15-minute chart is we actually create a low here, we violate that low, and then create a low here, and then make a lower low, and price just continues moving to the downside. Now if we look, we can see a 15-minute order block that broke structure, which refines our overall 1-hour point of interest to something much tighter. So this is basically an 8 pip range. The hourly is roughly 17 pips, so effectively it reduces it by a little bit over half. Now, if we then drop into the 5-minute chart just to see market structure just a little bit clearer, what we can see is as price moves up into the 1-hour point of interest, we can begin to see in and around essentially this part of structure that this is beginning to form a distribution schematic. So what we can see is price begins to slow down here, lots of wicks, a lot of indecision. We get a lot of double tops and a deeper pullback than what we've seen prior. So that would be our preliminary supply area. Another key point to note as we're starting to see all of this is we start to see a lot more equal highs in this area. And again, similar to down below, a lot of liquidity sitting up here, but in this case, people looking to sell or have been selling at this area, forming it as resistance, would have their stop losses in and around this area more than likely. So what is more than common is to see a purge up of the liquidity, which we see with the up thrust right here and the up thrust after distribution, which ultimately creates the push lower. Now on a conventional distribution schematic, we'd be looking to take our sells on a test of the UTAD, which we didn't really get an overly clear test. We could be looking for positions either at this retest of basically this last bit of structure or down here, which would be a little bit cleaner just because we're seeing the automatic rally points. But in this case, the trade was ultimately taken based on the 1-hour and 15-minute order blocks rather than Wyckoff. The distribution schematic was more just an added confluence to suggest that this trade was ultimately going to play out. Now, if I'm looking at the entry itself, what we can see is price taps into the 15-minute order block, pushes away, breaks structure, or at least breaks this wick here. Then we get a very quick reaction back to the upside. that tags the 15-minute order block once again, basically creating that equal high. We get a push away, a pushback that creates a lower high. In this case, it hasn't broken structure, and that's what ultimately the order was set based on, this kind of bearish engulfing here. Understanding that we could very likely purge back into the order block, with the understanding of knowing that price could very well purge these equal highs, taking liquidity, and tap deeper into the order block itself. But if I look at the time, it was about 9 p.m. I was just gearing down for the night, focusing on a few other things, so I decided enter the trade with the stop just above the point of interest, knowing that price is more than likely going to consolidate, as this was during the Asian session, and we didn't actually start to see momentum come into the market until about 2:15 Eastern, which would be just before the London session open, and then we can see that's when this trade fell right down, basically coming straight to target, right in the morning, right prior to New York. Now, again, like I'd said, the reason we were targeting the prior 4-hour low was just simply on the basis that we knew that the daily structure was bullish, that this was more of a retracement trade. Yes, the 4-hour was putting in lower lows and lower highs. We can see that here. We know, though, that we aren't going to be, shooting for the fence to aim for the daily low, which would suggest maybe a trend change overall. So we kept the trade pretty conservative in that nature. I had posted in the Telegram that this was a 7% trade. I had ultimately cut a chunk of the position basically at this area right here, just basically looking at this as a point of interest that we could see a reaction on. So secured a majority of the position and then just trailed with 15 and 5-minute structure just above essentially these points here, until we hit target right around here.